Elon Musk once claimed that the company's growing expansion was the reason why Tesla's car prices were at an embarrassing level. The president of Tesla also stated that the company wants to make EVs affordable, which may be the reason it is starting to lower the price of certain of its cars globally. American speculative executives at Morgan Stanley have stated that Tesla's value activity may be increasing and decreasing in electric automobiles, despite the fact that the cost of the vehicles may be high for Tesla EV buyers. Welcome back to Tesla Facts, everyone. According to a Morgan Stanley analysis conducted in December, Tesla's declining stock price was a good time to buy. The company did, however, reduce its value focus from $330 per share to $150. With all of the volatility, Tesla stock had a wild year in 2025, and Morgan Stanley's cost target reduction was by no means helpful, since it has claimed that there is an excess of EVs on the market rather than the potential for a severe shortage. The company appears to be growing more concerned about rate requests at the moment. Is there ever a chance that enthusiasm in the EV industry may decline? Let's investigate. However, before we do, please remember to hit the like button, subscribe, and enable notifications if you enjoy this kind of information so that you can remain up to date on anything related to Tesla. When companies begin to scale back their EV designs rather than continue to develop them, as is already the case with many EV producers, financial backers will recognize there is an excess. Most people would concur that there is an excess of convincing electric vehicles, rather than an excess of electric vehicles in general. According to many analyses, more than 1 billion EVs will be sold over the course of the next few decades. There is no denying that electric vehicles are the way of the future for portability and driving as global EV production rises. The tendency is irreversible due to a number of causes. Even if advancements in battery chemistry will continue and fresh materials may be used, the company did not take off when the first electric vehicles were produced because of their very high initial costs, poor battery range, slow speed, and significantly reduced environmental concerns. In any case, the last 10 years have witnessed a great deal of interest from original equipment manufacturers, customers, and lawmakers. This has led to significant investments being made in the production of electric vehicles and battery innovation, which has further resulted in the sale of numerous vehicles across various nations. More and more individuals are realizing that using electric vehicles has many benefits. Among these are the significant operating and maintenance cost savings. Any vehicle's operating and maintenance costs make up a sizable portion of the total cost of ownership, and it is now widely accepted that buyers of electric vehicles spend far less on these costs. This is due to the fact that electric cars are easier to maintain because they have fewer moving parts than gas engines. Additionally, charging is convenient. Instead of using petroleum derivatives like gasoline or diesel to charge their batteries, electric vehicles rely on electricity. Customers will find it easier to charge their batteries at a nearby station rather than standing in line at a petrol station as more electric vehicle battery charging stations appear. Additionally, owners of electric vehicles have the option to use charging hardware to recharge their batteries in the convenience of their own homes. Although a number of factors contribute to the popularity of electric vehicles, government measures have prompted more people to think about buying one. Customers are calling for low-emission transportation options instead of fossil fuel-based ones. And some governments around the world are supporting the electric vehicle industry with subsidies and legislation. There is no doubt that a downturn is imminent, and the market for electric vehicles will most likely be impacted by this. According to some analysts around the world, the slump is likely to have a detrimental impact on interest in electric vehicles. Adam Jonas of Morgan Stanley has also warned that investors should reduce the growing danger of negative income adjustments for 2023, as electric vehicles have transitioned from a severe undersupply to a possible oversupply that has a strong effect on a sector that has high relative valuations and substantial costs. According to Morgan Stanley, the electric car market will undergo a significant shift in 2023 from the previous 2 years of interest exceeding inventory to supply exceeding demand. In this context, players who are self-subsidized, independent of outside capital funding, and exhibit size and cost authority across the value chain, from assembly to upstream material stock, can be relative winners, according to Morgan Stanley researchers. Accordingly, the company believes that companies like Tesla and Rivian will likely do better than companies like Fisker, Lucid Group, and many others that may face significant difficulties during a downturn. For the second time in less than 90 days, Tesla has lowered the price of the Model Y and Model 3 in China in recent weeks. The carmaker also released a delivery report that fell short of expectations. The market isn't sure how to react to actions like Tesla's massive cost reductions in China, the US, and Europe, because the economy is at a crossroads between reducing inflation concerns and raising predictions for a slump beginning in 2023. According to industry analysts like Ronald Jessup of Guggenheim Securities, these cost reductions may cause Tesla's overall margins to drop by 25% below Wall Street's estimate and reduce earnings for all of the automaker's rivals in the face of macro uncertainty. Dan Ives of Wedbush believes that this is the best course of action to begin the EV transition. This is not a time to be hands-off, as Wall Street believes, but rather for Musk to guide Tesla through this moment of lower demand, according to Dan Ives. According to Ives, this is a turning point for Tesla as Elon builds the foundation for the network's next phase, which will see it continue to rise, with several ups and downs. The EV industry began operations in 2023 as market priorities were rearranged. However, Tesla has an advantage over other EV manufacturers since it is able to force industry costs lower. Garrett Nelson, an analyst at CFRA Research, claims that Tesla remains the most advantageous EV manufacturer, given that the company is anticipated to have generated approximately $4 billion in late 2020 to income when it releases its final core earnings in January, after having approximately $21 billion at the conclusion of the third quarter. Nelson thinks Tesla is not in risk of experiencing a cash burn, in addition to saying that Tesla is his number one choice among automakers and that CFRA financial experts don't anticipate a decline. He said he believes the stock will recover swiftly this year. Nelson also pointed out that Tesla is trading at multiple times the profit expectations for the current year, which only require a profit growth of 25.5%. These figures are modest for a growth company that has space to continue developing rapidly. According to the analysis, Tesla will sell more cars but suffer a decrease in overall income following the price reductions. This should increase the company's competitive edge and allow many more Tesla automobiles to be eligible for the approximately $7,500 federal tax credit, he continued. In addition to having a price advantage, Tesla has a significant lead in software, the Cybertruck, which Tesla is once more urging to launch this year after being postponed since 2021, is not included in these profit projections, according to Goldman Sachs analyst Mark Delaney. Cheaper designs at Tesla's more recent manufacturing facilities and a surge in Chinese sales could enable car deliveries rapidly recover by the middle of the year. As Tesla addresses autonomy, interest is likely to grow. In order to make its cars completely driverless in the near future, the carmaker plans to significantly improve their autonomous capabilities, while also updating their features. Tesla has been testing its FSD technology for more than 2 years, and the firm has long provided Autopilot, a driver assistance system that regulates acceleration and braking on highways. FSD, on the other hand, is a work in progress that aims to bring this technology to city streets as well as highways. If accomplished, Tesla would accomplish a remarkable achievement and solidify its position as the top EV manufacturer before the end of this decade. Without regard to demand, Tesla will continue to increase production at its plants across the globe and deliver as many EVs as possible. It's important to remember that pricing is a poor measure of demand when there is an incentive nearby. Even though many would contend that Tesla is recording slower vehicle demand as a result of EV market developments, the majority of EV buyers will hold off on purchasing an EV until a tax credit is implemented. The answer is straightforward. If customers are aware that the car will eventually be offered for less, they will prefer to wait. Therefore, rather than continuing to worry about Tesla's seeming decline in popularity, investors would be better off focusing on the company's enormous pricing advantage, which it will surely maintain. Do you believe that demand for EVs is declining globally? Tell us what you think of Tesla in the comments section below. Feel free to touch on the next video that appears on your screen to learn more about what Tesla has been up to in the last few days.